home consumption. The same gas cylinder you are getting for 560. What about this 240? 240 given by government. Government means subsidy. You have to make payment within 30 days. If within 30 days your payment is not done, that additional 1% discount you have to ignore. That is cancelled. At present, the US dollar price is 89 to 90 rupees is there. But earlier it was 65. We have taken an example as 65. A warm welcome to one and all. This is your Radha sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. We are discussing your Unit 3 and Session 2 and place and value of supply. Now, in this, in the previous session, we discussed about the transaction value calculation. The same thing we will continue with the additional adjustment. If there are two types of discount will come, what has to be done? All these things we will discuss in today's session. Problems on transaction value. Exclusion of discount from transaction value, when we need to exclude and how to exclude. Problems on Rule 27. Problems on Rule 30 and 31. Again, Rule 32, subsection 4. Problems and solution on 32, subsection 4. Rule 32, subsection 5. Problems on and solution on Rule 32, subsection 5. Don't worry about the sections and rule. Directly understand the concept and you can do the problems. Now, problems on transaction value. Now, we'll go with problem number 1. Mr. Mohan purchased a laptop from dealer in Mall of Mysore. He paid amount of 45,000. How much he paid? 45,000. Consideration plus GST. MRP of the laptop was 53,000. What is the MRP return? 53,000. But what amount is paid? 45,000 is paid. Now, offer to all the buyers rupees 20,000. Find out the invoice price. CGST and SGST payable is 9% each. 9% means how you have to do? 9 plus 9. It will be 18% your GST. Now, the actual amount paid is 45. Laptop was 53,000 MRP and discount offer to all the buyers rupees 20,000. 20,000 discount is given. Now, as per this, what is the purchase price? 45,000. And what is the actual MRP of the laptop? 53. Discount offered is 20,000. Calculation of invoice price. You are supposed to find out invoice price. Now, transaction value of the price 45,000, whatever he paid. And what is the CGST, SGST? 9%, 9%, 4,050, 4,050 plus 8,100. The total value will be 53,100. Hope you are clear. So, whatever amount he paid, that will be considered to calculate the CGST and SGST. Now, price actually paid are payable for supply as per these GST norms. The transaction value which is applicable between unrelated person where price is the sole consideration of supply. The price of actually paid payable for the supply of goods, service, both. So actual what is paid, no, that will be considered as supply of goods. Then taxes there, then GST if charged separately by the supplier under section 15. In this GST we calculated, sometimes GST is calculated separately, added separately. Now, as per this, any taxes, duty, fees, cess and charges levied under any law for the time being other than CGST, SGST, IGST, UTGST, compensation, cess shall be added to the value of supply. Always, when you will get value of supply, your actual value paid plus add your tax, GST. Then only you will get value of supply. Now we'll come to your next rule. In this, admission to Wonderla is rupees 800. Ticket plus entertainment tax at 30%. See, always remember, entertainment tax is always highest price. In the month of May 2023, $1 sold 1,500 tickets. This is a number, not a price. Remember, the value of taxable supply of services, if the rate of GST is 12%, also find out GST liability. Now, as per this, entry ticket of $1 is 800. The entertainment tax is 30%. And how many tickets sold? 1,500 tickets sold. Now, rate per ticket 800. 30% on 800, 240. Total value will be 1,040. 1,040 multiplied with what? 1,500 tickets. And the tax must be splitted 6% and 6%. Calculation of total taxable value. 1,040 is per ticket. Multiply with 1,500 tickets. Your taxable value will be how much? 15,60,000. 15,60,000 into 6 by 100, 93,600. 15,60,000 into 6 by 100, 93,600. Hope you're clear. Your entertainment tax is not CGST. Clear? Your entertainment tax is not GST. You have to add that. You will get a total price. On total price, you are supposed to calculate GST. Hope you are clear. On the total value, we split 6% for government, central government, and 6% for state government. Similarly, for the next one, in this, Mr. Kumar sold goods to Mr. Swami worth 6,50,000. As per the contract of sale, Mr. Kumar required to deliver the goods in the permission of Mr. Swami, premises of Mr. Swami. Kumar arranged transport. What is the worth of goods? 6,50,000. And for this, transportation for delivery of goods, however, transportation charges 19,500 paid by the Swami to transporter. Find out the transaction value. See, the actual value is 6,50,000. Along with the transportation 19,500 also paid. Should we include or not? Always remember, in the previous session we did many problems actually. Whatever the selling price is there, you should add all the transportation, pre-inspection, insurance, packaging, all the charges should be added. Only two things should not be added. Which are those two? One is all the taxes and the second one is subsidy by the government. Now, add these two, you will get 6,69,500. So, incidental charges, whatever incidental charges means, like inspection charges, transportation, insurance, packing, all comes under incidental charges. Now, interest, late fee and penalty for delayed payment under section. Yeah. So, for example, you are supposed to make payment within January 1st. You made 10 days delay. For that, they will charge what? Penalty or delayed charges. Like the value of taxable supply will include not only the base price but also interest, late fee and penalty delayed. See, in case of penalty for delay, interest, all these things will be added to this. Now, subsidies. Subsidies is the sum of money given to the keep for the price of service, commodity, low. See, for example, the LPG, gas. The gas cylinder example I am giving you, available for 800 means the same gas cylinder if you are using for home consumption, the same gas cylinder you are getting for 560. What about this 240? 240 given by government. Government means subsidy. The same gas cylinder if you are using for commercial purpose, then you have to pay 800. Hope you are clear. Anything used for commercial, you will not get subsidy, but anything used for consumption of yourself, you will get subsidy by government. Similarly, for few manufacturing, they will give subsidy. That subsidy will be always, as I told you, given by government, should not be included. Given by somebody, private institution should be considered. The subsidy given by the state government or central government, the lower price after adjusting the subsidy is a taxable supply. See, you should not consider always, you have to go with the lower price. Subsidy given by the person or entity, it does not lower the taxable value. The subsidy is added to the value of supply. See, any subsidy given by the private employee, it should be added to this value of supply. Next, we'll go with the problem. Now, C supplied a machinery for rupees 3,40,000 with the condition that remove old machinery from the premises of Mr. A by charging 13,500 as an additional charges. Commission 10,000, packaging is 6,500, installation 14,000. Find the value of supply and of C. Simple one. Whatever charges, incidental charges are added, we have to add that. As per this, the value of supply, value of goods is 3,40,000. Charges for removal of old, that also part of this value of supply. Then we'll go with commission, we'll go with packaging and installation. The total value will be 3,84,000. Simple one. As I told you, there are two things you have to remove. Other than that, whatever the incidental charges comes, you have to consider. Then interest, late fee, penalty for delayed payment. As I told you, it is always part of your supply. Next, exclusion of discount from transaction value. Always discount what you are supposed to do. After adding everything, whatever discount is given, you have to deduct. Now, discount that are allowed before are the time of supply and shows in the invoice. Discount that are allowed after supply and are worked out invoice wise and the proportionate input tax credit reversed by the recipient. This while doing the problem, I'll explain you. Now, in the discount, we'll go with one problem. Maruti Car Limited sells car to Sharma for 9,50,000 each. Insured packaging 28,000. Transportation 36,000. Provide discount 2% on car price. What is the car price? 9,50,000 is the car price. Now, in this, Maruti Cars Limited agrees to provide for further discount of 1%. See, normal discount is 2%. Additionally, they are giving 1% extra. Through the net banking, the Sharma Automobiles makes the payment and net banking only. Find out the invoice plus GST. The GST is 28. 28 means you have to go with 14% and 14% each. Ignore additional discount 1% provided for payment received before 30th days because discount given after supply. It is very simple. There is a condition for that additional 1% whatever discount they are giving. There is a condition. You have to make payment within 30 days. If within 30 days your payment is not done, that additional 1% discount you have to ignore. That is cancelled. Now, value of the car. The value of the car is how much? 9,50,000. Packing charges, it is 28,000. Transaction charges, it is 36,000. If you add everything, the total is how much? 10,14,000. Now, you have a discount of 2%. As I told you, discount is calculated on what? 9,50,000 on the cost price, cash price. Now, 9,50,000 into 2%, you will get around 19,000 if you minus 9,95,000. In this, when the payment is made, we'll check. Payment is made. Automobiles, if makes the payment within 31st 2023, but a payment is made on, the net banking, Sharma Automobiles makes the payment on 30th 1 2023 through the net banking only. Find out the invoice. So, the payment is made within 30 days. Now, in this, discount is given 2% and the CGST calculated 14%, SGST calculated 14%. After this, your final answer 12,73,000. Now, this is how you are supposed to calculate. They have mentioned that 1% additional discount you have to ignore. So, we have ignored. Now, value of supply of goods services where the consideration is not wholly in money. Sometimes it can be paid in kind or exchanges. Open market value of such supply. If the open market value is not available, the sum total consideration equal to money and such further amount in money as is equivalent to the consideration not in money. For example, you sold something, the price is 1 lakh, but 50,000 you made in cash and remaining 50,000 you paid through kind. Kind means you have exchanged some furniture, exchanged some machinery. So that we call it as exchange in kind. Then the overall, the market value should be considered for the calculation of your GST. If the market value is not available, then you have to go with the cash and kind. Together price has to be considered. Now, the value of supply like kind of quality if and not applicable. These are theory part you are supposed to remember. Just you have to read it once. Next one, HH Company Limited Bangalore supplied 200 laptops to Vidhyaashram Education Institution in Mysuru, 60,000 per laptop. Along with the exchange of old laptop, if the price of the new laptop without exchange is rupees 68,500. See, if you exchange your old laptop, it is 60. If you are not exchanging, just you are buying a laptop, 68,500. What is the GST? It is 18%. Now, as per this, supplier HH Company, product is laptop, total 200 numbers, price of exchange 60,000, price without exchange 68, and rate is 9%. 200 into 68,500, so 1 crore 37 lakh. Your 18% GST calculate and write. The exchange price cannot be considered for your invoice. Hope you are clear. The exchange price is not part of your this thing. You should not minus that. Now, problems on Rule 30 and 31. Direct material inclusive IGST. They have given 2,950. Direct wages, other indirect expenses, indirect material, factory overhead, administration. In this, 25% related to production overhead, selling and distribution, quality control, research and development, sale of scrap, actual profit margin. All put together, the profit margin is how much? 10%. Means up to this cost, the 10% is profit margin. Cost plus 10% is your selling price. Now, selling and distribution expenses are not considered and sale of scrap is deducted out of total cost. Now we'll go to answer. Direct material, they have mentioned, see, inclusive of IGST. The value of supply, always I told you, tax should not be part of that. You have to remove that. If it is a part, you have to remove. How to remove that? Now, 2,950. In this, 2,950 into 100 divided by 118. Why? Because 100 is always cost, 18% tax. So total 118% is equal to 2,950. Remove the tax, your answer you will get 2,500. Similarly, direct wages, other indirect material, factory, administration, quality control, research and development, all put together 3,725. Hope you are clear. Good. Now, scrap value, less scrap value, it is 50. Your final answer 3675. Scrap value has to be deducted, remember. And finally, what is your profit margin? 3675 into 10%, 368. Your final answer 4043. Simple. You can work out all the problems once at your home. Now, the next one in this, Rule 32. Purchase or sale of foreign currency, including money changing. So this is all about the rule number 32. While doing the problem, I'll explain you. In this, calculation of value of supply of goods as per rule number 30. Amount. In this, foreign currency sold into RBI reference rate of that currency to Indian rupee. How much foreign currency sold? It may be $100, $50, $1,000. Multiply with what is the RBI rate at present. Multiply. Second one, amount 2. Foreign currency bought. This is sold, this is bought. RBI reference rate. That currency to Indian rupee. Same thing. Third one, in this, gross Indian rupee, amount 1 or amount 2, whichever is less, that has to be your taxable value is equal to 1% of gross Indian rupee. I'll go to one problem. In this, the value of supply, the percentage which is given. Determine taxable value for foreign currency, amount of up to 1 lakh if you exchange 1% of gross amount of currency exchange, or minimum 250, whichever is higher. Second one, if your exchange is more than 1 lakh and below 10 lakh, 1000 plus 0.5% of the gross amount. If it is exceeding 10 lakh, 5500 plus 0.1% of the gross amount. Maximum of 60,000 per transaction, whichever is lower. Remember. And last one, rupees 1000, that is up to 1 lakh currency. See, we started with 1 lakh in this. Note number 2, 1000, that is up to 1 lakh currency exchange transaction. 1000 is applicable thereafter for remaining 0.5. You will not get any problems on currency exchange. For your safer side, we'll do one problem on this topic. Now, determination of value of supply and services related to purchase or sale of foreign currency. Example, sold $1,000 at 65. At present, the US dollar price is 89 to 90 rupees is there, but earlier it was 65. We have taken example as 65. Purchased 900 euros at 1 per euro, it was 75. Purchased again GBP at 1 GBP, it is 104. Sold 65,000 unit of currency at 1%, 21. And sold 15,400 US dollar at 9,000 G. These are the calculation they have given. Once US dollar equals to 64, 1 euro is 79, 1 GBP is 108. Now, you are required to calculate the value of taxable supply. As I told you, it is not much important. Just for the safer side, remember one practical problem. Sold how many US dollar? 10,000. 10,000 in this. 10,000 is there, 1 rupee per 10,000. Now, 65 minus 64 as per in this. So, 64 RBI reference. But what price they did? 65, 1 rupee difference. That 1 rupee we have to consider 1 into 10,000. Your answer is 10,000. Purchase 900 euros 1. Similarly, 79 minus 75, it is 4 rupee. 4 into 900, 3,600. Purchased 108 and 104, the difference is 4 rupee. Multiply and you will get 5,600. Similarly, sold 65,000 units. 21 is given. 65,000 into 21. As per the rule, it is 1%. It is 13,650. Next one, 15,400 for 9,000 GBP. Similarly, if you calculate, whichever is less if it comes, amount 2. So, 1% of the amount. 1% of the amount. Whichever is less amount is there, on that you have to calculate 1%. So, amount 1 is lesser. So, you take 9,85,000 into 1%, 9,856. And amount 2 value is 9,720, whichever is lower. Whichever is less, 9,720 is less. Total value of taxable supply, add everything, 42,570 you will get. On that you calculate 9%, 9% GST. Your final answer will be 7,662. Hope you are clear. As I told you, don't spend more time on this because this is not much important for your examination. Surprise Limited, authorized to money charger, registered FEMA 1999 and enter the following transaction. 800 transaction of conversion dollar into Indian rupee, 27,500 per transaction. Similarly, they have given all the transaction. Per transaction, we have to charge charges. Now, 400, 350, 200, 300, 250. Now, what is the conversion? 21,500, 1,10,000, 6 lakh, 2 lakh 60, 160 lakh, 9 lakh. These are the, and what is the GST percentage? 18%. You know the slab already. Now, 1%, 1%. Just you have to take the value, calculate 1%. Whichever is higher, I'll go back to your previous one. You have to remember this. Based on this only we do calculations. These are the calculations they have done. You can check once. Yeah. Once you are done with all the calculation, you have to go with the GST percentage. Now, booking air travels tickets, again, whether it is a domestic, 5% on the basic fare. If it is an international, 10% of the basic fare. Taxable value paid GST, 18% on that. So, full input tax rate is available to the travel agent. Input tax rate means what is excess paid can be adjusted. Pay GST 18% on commission, pay CGST on basic fare. See, domestic is 0.9 and this one is 1.8. Based on that only they have done one problem. Airlines sold Singapore 145 tickets at 2,65,000 each in the month of May. The total amount charged 3 crore 31 lakh 25,000, which includes 65 lakh towards passenger taxes. Determine the value of taxable supply. Tax rate is 18%. As per this, basic fare is how much? Is this national or international? Yes, it is international. International, number of tickets into value, passenger tax you minus, taxable basic fare you will get, value of taxable supply is 26, 62, 500. Why? Because we calculate 10%. Now, because it is a international. If it is a domestic, we go with 5%. Now, whatever answer you get, on that you calculate 9%, 9%, that is CGST and SGST. Now, similarly, we calculate this, the basic airfare, international ticket booking, then commission received, then incentive received per month, service charges, handling charges. If you add everything, commission received from this incentive, service charge, handling charges, everything if you add, you will get taxable supply. On that you calculate your GST. Same procedure. Just you need to add, if it is a domestic, go with 5%, international, go with 10%. Now, this is all about your insurance services. Under insurance services, 100% premium collected, pay GST 18%. Now in 2025 and they have removed all the GST on the insurance, your life insurance and few insurance for certain limits are there, they have removed. But for your examination, you have to consider GST. Now, premium covers risk plus saving, the amount allocated for saving, all this calculation, gross premium minus saving, you will get net premium, on that you calculate 18%. Similarly, you have to remember this percentage. Now, the first one, only risk cover 800. Variable insurance policies, 75% of the amount is allotted for investment on behalf of the policy. That will be 10,000 and 900 and this is 10,000. Now, risk cover policy is 800. Insurance with 75% coverage is 10,000. Single premium annuity 900. General policy is 10,000. Similarly, the calculation part is very simple. Now, 100% coverage multiply in this. It is not 100%, it is a 75%. The remaining is how much? 25%. 900 is 10%. Calculate, you will get 1250, 1250. Total taxable value is 5890. What you are supposed to do? On that you have to calculate GST. Rule 32 subsection 5, supply of second hand goods. See, usually what happens, the new product will be sold. Once it is manufactured, you will pack and you will sell. There is a first time selling, but after selling, that person will sell it to somebody. That is second hand. Now, again, calculation, sales value, at what price you purchased, the remaining will be taxable value. Now see, calculation of taxable value, purchase price minus 5% of the quarter from the date purchase to the date of disposal. It is nothing but the depreciation you are reducing. Now, sale price minus purchase price of repossessed. Repossessed means I have given you goods. I gave you time to pay in 1 year, but in 1 year you have not repaid. Then what I can do? I can take back that goods. It is nothing but your hire purchase. In the hire purchase, we have a concept of repossessing. That repossessing we are talking about. So similarly, we'll do one problem on this. Ram is engaged in buying and selling of second-hand car in Mysuru during the month of 2023. May supplied used car in after repair painting is 6 lakh, which he allows purchase from Mr. Sham 5,25,000. Find the value of taxable surplus. 6 lakh worth 5,25,000 which he was purchased. If Ram is not availed ITC, if your solution different in case of purchase price is 6,40,000. More than the actual selling price. As per this, sale price of the car 6 lakh, purchase price 5,25,000. What is the profit? 75,000. Sale price, second case 6 lakh, purchase 6,40,000. Loss is how much? 40,000. This is what your calculation. Hope you are clear. So all the calculation, just again watch this video. No need to listen, just you have all the concept, all the rates, everything is there. If you apply your mind, remember the percentage, the slab, you can only do the problems. So all are easy actually, and these are your 10-mark question. In the 10 mark, they will give you 5 marks theory and 5 marks this kind of one problem. So all the very best. We'll meet in the next class. Thank you.